Hi there, traders, and welcome to Trade the Structure. Now, I'm just going to talk through a couple of short trades and the reason behind the short trades after make it broken down a bit. So I thought it's a good opportunity just to talk to the price action, the reason why I took the trade, and the actual loss prior to getting into the second one that was actually a winner. So it was basically two trades on the Aussie 200 and then one trade on the Nikkei, which is the N225 on the TD 365 platform. So before we get started, remember to take a look at the website. It's www.tradethestructure.com. There's a lot of free information. Subscribe to the site. There's a members area. I'm always uploading stuff in there, hopefully educational material to help you out. And just, win, lose, or draw, uploading some live trades. So yeah, just keep an eye on that website once you're subscribed in the members area. Now, let's get into it. What I'll do is I'll post the actual, we'll look at the trades a bit later on, as in the results, entries and exits, so you can scrutinize those yourself. Now, this is a 1 minute, so I actually put on the 5 minute to explain first. This is the 5 minute of the ASX 200. So you can see it's a bit of a breakdown. Now, no one knew that was going to happen. All you can do is anticipate what could happen and position yourself accordingly. And like I say all the time, it's not about getting in or out or what's wrong and what's right. It's about management, okay? If you're in a good area, a prime area, all you can do is manage the trade. So the first trade, like I said, was a loser. It's pretty much a stock standard trade. The second trade was very much the same, just off a slightly higher level. You can see I've got them marked up here. First trade failed, second trade, and all I had to do was manage my first trade. Okay, took the loss, jumped in on the second trade, and then that actually worked out fine. So my theory or my bias was correct. It was just pulling the trigger a little bit too early, and making sure that if you're going to pull the trigger early, you don't hold it. You're just managing your risk. Okay, so you can see the market's powered down overnight, had this bit of bounce, retested that low, flushed the low, and then we finished up near these highs. So, okay, the market's open on the ASX, popped up into a level and started to come down. So I was basically looking at this, thinking we're going to get a lower high, we're going to come off that zone and start to go down. And I'm looking at those three candles there especially. So what I like to do, I call them the LL2 or HH2. The LL2 is taking out the previous two low candles after a little high, which is that's made the high. So this candle takes out that low, and then I'm in. Okay, now it was pretty weak. I was a bit preemptive. Momentum was easing, which is good. I would rather see the rollover, which it basically did here once I got into this second trade. Same theory, three candles. That momentum started to roll over, were a bit more near the zero line, and did kicked on from there. So that was the first trade. We'll go down to the minute chart, but the reasoning why I like that second trade, why it probably worked out better, you can see that was a little resistance zone when it popped up. It's pushed up above it, finished. Then this next candle down and back above and finished it. So we're on the 5 minute, don't forget. And this third candle, yeah, it did fail, but it was a bit uncertain about holding above there. So it's not conviction from the sellers at all. Okay, whereas this one, you pop up above, straight back down and below. So any move up above that level is met by instant selling pressure coming straight in. And then we obviously got the third candle broke down. So you can see that's why you got the follow through on that third candle, that red candle there. That was my entry in there. And then it kicked on. So if we look at the 1 minute chart, you can see that their break of that bottom was sort of on the 5 minute, that three candle setup. I probably took it a bit early. I think I took it on this red candle when it started to break down. I think I was in front for probably all of about 30 seconds before it turned around and reversed on me. And as soon as we started getting this higher low hold and getting push up to this high, I bailed. I think my stop was just above there, but I bailed probably 3 points earlier. Okay, took the loss, licked my wounds, and then just kept watching it. I think at this stage, I thought there's a chance that it pops up, but by the time we got here and rejected it again, and that was the start of the Nikkei, their session open. So it started to find some weakness. Nikkei was weak, and we just followed them straight down again. So that was there. The break of that bottom on the box there is the setup. I took it slightly early. I think I actually might have taken it just at that break there. Took the short again. Risk was just above, and then edged out into this low. Okay, and I think I took some out just through that low as well, and that was it. It was all over. Now I left a bit on the table. Probably left, I think, somewhere around 40 points or so, but that's the nature of the beast. Still did all right, still happy, worked it into that low. And the nature of the markets lately, they haven't followed through very well. So you get it through this low, and then more often than not, they're bouncing straight back again. So it's trapping some shorts, squeezing them out, trapping longs, squeezing them back out. Okay, this time I was wrong, it followed through. Okay, but that's, you got to trade what's been the predominant, I guess, trend of the market. And that's why I should have really, in all fairness, I should have left some on just as a short. Left some open, took my partial, took a couple of partials and left some open just to open it up and see where it goes to. And that would have been a lot better. But yeah, unfortunately, I didn't. Stupid mistakes again. Over to the Nikkei. Now you can see that's a 5-minute chart there. You can see the market's rolling over. We had this big rejection off this level up here, smash through this support, come back up, retested a little bit deeper, and this level faded with a lower high, faded again, another lower high, come back down, took out the low. Then we sort of popped back up here into the close of the US session. And then you can see where the MACD was and the momentum. It was starting to roll. So it was just off that, coming around that zero line, which I love. If it's starting to roll around that zero, you know there's a lot of room to move for it to expand. Okay, we're looking for market to expand. When you're looking here to short here, when the MACD's down here, it's in that oversold territory. So there's not a lot of room for it to expand if you're going to short it. But there is, on the upside, it can start to expand back up on the upside and swing back up again. Okay, so that was essentially the setup on the Nikkei. I think the market opened on this red candle was the first 5-minute candle, popped down, started to grind back up into this resistance. Then the underlying index opened, which is at 11 o'clock Sydney time on this candle, and it opened up, went down. So that was my 3-candle setup again. Love it. We made the high. We've taken out the previous 2 highs, and then I'm just taking a look. I think I traded it through. It might have been just through this level, through here. Okay, just close enough to that break. Traded it through there. Shorted into there, and basically it was a great trade. It didn't look back at all, just continued to head south. So looking at that 1-minute chart, you can see that was a setup off the 5. The break of the low of that box is basically the setup, risk above. But if you're on the 1, you could start to refine it. It was pretty much the same area, really. You could have lowered your risk a bit because there's a little minor lower high in there, but I took it through here. Risk was up here, about 40 points or so I have it on the Nikkei, and then straight down. I think I took it off, some off through this low, just below that low, and then some off below this low in here. So it was some around here, and I think I edged out the whole lot here. Now this one hurts a little bit more than the SPY. If you can see what I left on the table there, and I should have left some running, just to where it is now, 415 points. So, you know, you've got to shake your head. There's days like that. It happens. You think you've got a good trade of 60 to 80 points all up, and it drops another 400. Now, you're not going to see that coming. That's the benefit. If you trade a certain style, if you trade and you're going for those bigger wins, you're going to take a lot more losses. Now, if you're sort of more of a scalping mentality, which I tend to have, I try to hold them a lot longer, but I'm scalping out a lot. It's very rarely that I get a big move like that. Very rare. Unless you can sort of see it coming, it's a bit more obvious. Now, I probably should have held that. Like I said, break through the low, could have added there, you know, straight back in again. But it didn't really look like to me, like I was saying, the previous markets, we could have got this flush straight back up again. We could have got this flush through this low and straight back up again. Okay, and the previous markets have been flush, bounce, you know, trap some traders, whether short or long, and turn around and squeeze them back out on the reversal. Okay, so yeah, happy with that. All in all, can't complain. I'm done for the day. And yeah, that's it. Okay, so you'll see on the screen the trades from today. They're just the positions I took on the SPY and the Nikkei. And just prior to that, like I said, there was a couple of losses. So I'll show you those ones just for sentiment's sake. There are a couple of trades on there. So there was a couple of shorts in the SPY which didn't go anywhere. And then actually a long on the Nikkei, which didn't go anywhere either. So yeah, all in all, finished off quite strong. Nice little day, and we're done trading for the day. Looks like the Hang Seng's open. So we'll just see where, yeah, Hang Seng's just opening now. It's just kicking off, and the market's still finding some weakness. So that's the Nikkei and the SPY there. SPY may be starting to find some buys, but you know, we'll just see how that goes. If the Hang Seng starts to fall over, then I would expect these guys to follow them. All right, guys, that's it. That's all I want to talk about. Hope you enjoyed that. Now, if you did like it, it'd be great if you can subscribe potentially and leave us a like at our YouTube channel. And if you want to take a look around the website, there is some free material on the website. Subscribe to the members area. A bunch of stuff I put on there, and hopefully I'll start adding to it soon. A bit more educational material. That is www.tradethestructure.com. Feel free to jump on there. Ask me any questions. You can email at tradethestructure@gmail.com, and I'll get straight back to you. So thank you for joining me, guys, and we'll speak to you soon.